Well, folks, Donald J. Trump is back in the Oval Office for a second term, and you can bet Wall Street is paying close attention. The financial world is abuzz with speculation and anticipation. Investors, traders, and analysts are all trying to decipher what this means for the future of the markets. The markets thrive on predictability, and Trump's first term was anything but predictable. His policies, ranging from tax cuts to trade wars, created waves of volatility that kept everyone on their toes. Now, with 4 more years to implement his agenda, investors are eager to see how his policies will shape the economy and impact their portfolios. Will he continue with his aggressive trade policies? Will there be more tax reforms? These are the questions on everyone's mind. One thing is for sure: Trump is a businessman first. His approach to governance is heavily influenced by his business background, and he often views economic policies through the lens of a deal maker. He knows the language of Wall Street, and he's not afraid to make bold moves. Whether it's slashing regulations or negotiating trade deals, Trump is always looking for ways to boost economic growth. But will those moves translate into profits for investors? The stock market is a complex beast, and what benefits one sector might harm another. Investors need to stay vigilant and adaptable. That's the billion-dollar question, and the answer is far from simple. The interplay of global events, domestic policies, and market sentiment creates a dynamic environment that can change rapidly. The truth is, it's still early days. The initial reactions from the markets can be misleading, and it often takes time for the full impact of policies to be felt. The markets are notoriously fickle, and it's impossible to predict with certainty how they'll react to Trump's policies in the long run. Investors must be prepared for both opportunities and challenges. But by understanding the key issues at play, investors can make more informed decisions and navigate the potential choppy waters ahead. Staying informed and being proactive will be crucial in this new era. Buckle up, folks, it's going to be an interesting ride. The next 4 years promise to be a roller coaster of economic events, and only time will tell how it all unfolds. Remember that surge in the stock market after Trump's first inauguration? It was a remarkable period, with the Dow Jones Industrial Average hitting record highs and investors feeling a wave of optimism. The market seemed to be riding a wave of euphoria, buoyed by the promise of pro-business policies and deregulation. Many saw it as a vote of confidence from Wall Street, a clear signal that the financial sector was placing its bets on a prosperous future. The enthusiasm was palpable, with traders cheering and buy orders flooding in. It wasn't just the traders who were optimistic. Corporate executives and business leaders were also hopeful, anticipating a favorable business environment that would spur growth and innovation. Meetings were filled with discussions about expansion and new opportunities. But as we all know, the market can be a fickle beast, prone to sudden shifts and unexpected downturns. The initial surge was followed by periods of volatility, reminding everyone that the stock market is inherently unpredictable, and past performance is no guarantee of future results. Investors are well aware that what goes up can just as easily come down, and they must remain vigilant and adaptable. So what about this time around? With Trump's second term on the horizon, the question on everyone's mind is whether we will see a repeat of the post-inauguration rally. Will the market respond with the same enthusiasm, or will it take a more cautious approach? Will we see another post-inauguration rally? The anticipation is building, and traders are closely monitoring the situation, ready to react to any signs of a market surge. That remains to be seen. The market is in a state of suspense, waiting for the first signals that will indicate the direction it will take. But one thing is clear: investors crave certainty. They need to know what to expect in order to make informed decisions. Uncertainty can lead to hesitation and caution, which can impact market performance. They need to know what policies Trump plans to pursue. Will there be new tax reforms, changes in trade policies, or shifts in regulatory frameworks? These are the questions that investors are eager to have answered, and how those policies might impact their bottom line. The potential for profit or loss hinges on these critical decisions, and businesses are keenly aware of the stakes. The sooner the administration provides clarity on its economic agenda, the sooner investors can adjust their strategies accordingly. Clear communication from the government can help stabilize the market and build confidence. The sooner investors can adjust their strategies accordingly. Whether it's reallocating assets, diversifying portfolios, or taking advantage of new opportunities, timely information is crucial. Whether it's tax reform, trade deals, or regulatory changes, the devil is in the details. Each policy decision can have far-reaching implications, and investors need to understand the nuances. The devil is in the details. Investors and analysts will be scrutinizing every aspect of the new policies to gauge their potential impact, and Wall Street will be watching every move, dissecting every speech, and scrutinizing every tweet for clues about the future. The financial world is always on high alert, ready to respond to any new information, and scrutinizing every tweet for clues about the future. In this fast-paced environment, even a single tweet can send ripples through the market, making it more important than ever for investors to stay informed and agile. One of the biggest question marks surrounding Trump's second term is trade. Will he continue his aggressive stance on tariffs, or will he adopt a more conciliatory approach with our trading partners? The answer could have major implications for American businesses and consumers alike. Trump's tariffs on goods from China, Mexico, and other countries were designed to protect American jobs and reduce the trade deficit. But they also led to higher prices for consumers and retaliatory tariffs from other countries, hurting American businesses in the process. The question now is whether these tariffs will remain in place, be expanded, or be rolled back. Some argue that they are necessary to protect American interests, while others warn that they could spark a global trade war with disastrous consequences. The stakes are high and the outcome is far from certain. Another cornerstone of Trump's economic agenda is deregulation. He argues that by cutting red tape and reducing government oversight, businesses will be free to innovate, create jobs, and boost the economy. And there's no doubt that some regulations can stifle growth and innovation, but deregulation is a double-edged sword. While it can unleash economic potential, it can also lead to lax oversight, environmental damage, and consumer harm. The financial crisis of 2008, for example, was fueled in part by deregulation in the financial industry. The challenge for the Trump administration is to strike the right balance between promoting economic growth and protecting the public interest. Too much deregulation could lead to unintended consequences, while too little could stifle innovation and job creation. Section 5. Tax Cuts 2.0 Fueling the Engine of Growth. Tax cuts were a signature achievement of Trump's first term. The administration touted these cuts as a major win for the American economy, claiming they would lead to unprecedented growth and prosperity. The Tax Cuts and Jobs Act of 2017 reduced taxes for corporations and individuals, aiming to stimulate investment and consumer spending. The idea was that by lowering the tax burden, businesses would have more capital to invest in expansion and job creation. Proponents argue that it boosted the economy and put more money in people's pockets. They point to the stock market's performance and increased consumer spending as evidence of the tax cuts' success. Critics, however, contend that the cuts primarily benefited the wealthy and corporations, widening the gap between the rich and the poor. They argue that the benefits were not evenly distributed and that the middle class saw little relief. While doing little to help the middle class or reduce the national debt, the critics say, the tax cuts have exacerbated income inequality and added to the fiscal deficit. Now, there's talk of tax cuts 2.0 with the Trump administration potentially seeking further reductions in taxes. This new round of tax cuts is being pitched as a way to continue the economic momentum and further stimulate growth. The Trump administration argues that further tax cuts will lead to more job creation and higher wages, benefiting all Americans. They believe that a lower tax burden will encourage businesses to invest more in the economy. The goal, they argue, is to further stimulate economic growth and create jobs. By reducing taxes, they hope to make the U.S. a more attractive place for businesses to operate and invest. But critics argue that further tax cuts would be fiscally irresponsible, potentially leading to a ballooning national debt. They warn that the government may have to cut essential services to balance the budget. Exacerbating the national debt and potentially leading to cuts in essential services such as education and healthcare is a major concern for those opposed to further tax reductions. The debate over tax policy is likely to continue to be a contentious one with strong opinions on both sides. The future of the American economy and the well-being of its citizens hang in the balance. With significant implications for the economy and the national debt, the outcome of this debate will shape the financial landscape of the country for years to come. The stakes are high, and the decisions made will have lasting impacts on all Americans. Section 6. Slow and steady patience is key for investors. With so much uncertainty surrounding Trump's second term, It's more important than ever for investors to remain patient and avoid making rash decisions based on short-term market fluctuations. The economy is a complex system, and it takes time for policy changes to filter through and have a meaningful impact. Rather than trying to time the market or chase quick profits, investors should focus on developing a sound long-term investment strategy that aligns with their financial goals and risk tolerance. Diversification is key, as is staying informed about economic developments and how they might impact your portfolio. Remember, investing is a marathon, not a sprint. By staying focused on the long term and making informed decisions, investors can weather any storms that may lie ahead and achieve their financial objectives. Section 7. Stay informed, stay ahead. In today's fast-paced world, information is power. That's especially true in the world of finance, where events can unfold quickly and have a significant impact on your investments. That's why it's crucial for investors to stay informed about economic and political developments, both domestically and internationally. Make it a habit to read financial news from reputable sources. Pay attention to economic indicators, such as inflation, unemployment, and GDP growth. And don't be afraid to seek out expert analysis to help you make sense of it all. By staying informed, you'll be better equipped to make informed decisions about your investments and navigate the inevitable ups and downs of the market. Section 8, your turn. What's your take on Trump's economic playbook? So there you have it, folks, a glimpse into the economic crystal ball as we enter Trump's second term. It's a time of both opportunity and uncertainty, and the decisions made in the coming years will have a lasting impact on our economy and our livelihoods. But this isn't just about numbers on a spreadsheet or ticker symbols scrolling across the screen. It's about real people, real businesses, and real lives. And that's why I want to hear from you. What are your thoughts on Trump's economic agenda? Are you optimistic about the future, or do you have concerns? How do you think his policies will impact your own financial situation? This is a conversation we need to have as a nation. Let your voice be heard.